All right, so the Mag 7, the mega cap growth names, AI revolution, we know, listen, they've dominated the markets, they dominated headlines, and they're in all the conversations. Yet this is sort of intriguing. As far as exposure is concerned, they're still relatively light compared to where it's been in recent times. And it suggests maybe you can get some buying there, particularly by institutions. And this is the reason why, right? This sort of buy on tip mentality. Now, remember, this April swoon was a big place. A lot of folks dove in. They made a lot of money. The question is, will the same thing happen here? And, well, you know, again, it's hard for people to go away from this, but there was an interesting call this morning from Wolf. And it sparked a lot of chatter. Essentially, they're saying, hey, as long as there's AI spending expectations, right, as long as we expect it to hold up, the market overall should grind higher. However, the flip side of that is if those expectations are not met or achieved, well, 2026 could be rough. Now, here's the thing. My next guest sees no reason to hold Microsoft, Amazon, Google, or Apple because she says there is a major changing of the guard. I'm going to bring in now Liontrust co-lead fund manager, co-head of their global innovation team and partner, Clare Pleydell-Bouverie. I think I almost got it. Not too bad. Claire, I saw your work somewhere, and we wanted you on the show for a long time, so thanks for showing up. Let's talk about this, the next dominant market dynamic. So you're saying that tech is the place to be, but forget about the old guard, the Mag 7.
Yeah, absolutely, and thanks for having me on, Charles. I mean, what we're seeing really with every single major technology platform shift is that demands change for the infrastructure, for the software and services. The hyperscalers, who have majority, led the market up until now, they won the last decade. They were built on traditional compute. And now we're seeing new demands coming forward for new, cheaper, better products and services built on accelerated compute. Right.
So we've got physical AI, AI infrastructure, the build out, and value moving up the tech stack. We're going to go through these one at a time. I'll let the audience know a paper that I read of yours. You and your team, you traveled Japan, Texas, Silicon Valley a couple of months. You met with 40 management teams. And essentially, this is where we're talking about. Physical AI, is that just a euphemism for robots, more or less?
Yeah.
Yeah, okay. So robots, obviously, we know that they're growing. We know it's going to be, the adoption rate's going to improve, and that's part. Services robots, collaborative robots, robots. The question is, how do we make money on it? What are the players here? Because I saw a chart the other day of maybe 30 robot makers, including the one in China where the guy does the backflips.
Well, the opportunity in robotics, really, we see this as akin to identifying those winners of the compute infrastructure revolution 2.5 years ago. So think of identifying NVIDIA back then. And the opportunity is really twofold. You're looking for both the hardware players, the actual physical robots, the sensor suites, as well as the software and the compute. Now, on the hardware side, as you rightly point out, the Japanese incumbents are the market leaders here. The low end of that market, though, is being commoditized at an eye-watering pace by Chinese entrants, though. So we think you can still find value in high-value, high-touch players. So think of a Keyence or a Fanuc. Keyence, of their 1,000 new product innovations every single year, 70% of these are #1 in their industry.
A week ago, though, NVIDIA debuted or mentioned a new AI physical chip, right? So, I mean, there's a race there. Will they be a potential winner there, or will it be Tesla? Because all I hear about is Optimus is going to be a grand slam.
We think they're both going to be winners in different respects. I mean, with NVIDIA, the opportunity for physical AI is actually threefold. Not only is there silicon actually on the robot, you have the data center next to the factory, essentially training these robots, as well as digital twin infrastructure. So we could actually think that physical AI is the biggest opportunity of all the waves of adoption for NVIDIA, larger than enterprise AI, larger than the cloud wave that's going on right now.
Okay, let's talk about this networking demand, because you say networking is the new battlefield. What does that mean?
So the unit of compute is no longer the chip. NVIDIA's latest chip is 72 GPUs or AI chips linked together to act as one GPU. And these chips are approaching clusters of 1 million in a data center. So the real moat at scale is actually the interconnect. It's almost as important as the raw compute. And so this is where the battlefield is. We don't think it gets enough attention. NVIDIA's data center business, the networking component of that is now the fastest growing component, as we saw from their earnings results next week. But they're up against competition from some of the open standard players. So the Broadcoms, Amphenol's, Credos, A-Labs of this world.
Broadcom, obviously, it's a $1 trillion company. It still gets very little press. I think they report this week. And so is it like the sleeper name? It feels like in the $1 trillion club, it's the one no one talks about.
We think Broadcom definitely deserves more airtime because not only are they the leader in Ethernet networking, they're present in 7 of 8 of the largest training clusters in the world, but they're also the leader in custom ASICs. So they're helping these hyperscalers develop their own chips for them. So as these clusters of AI chips scale in data center, they actually get a double benefit, and we don't think that's priced into shares.
Amphenol, I think, is in the top 10 movers today. Credo, don't even remember. I sold this one too early, okay? I'm going to get back in. But the bottom line is you like these, and you look out like about a 3-year period or so, right?
Yeah, 3 to 5 years.
3 to 5 years. All right. On the value side, we talk about, the transition and a lot of things about agents. I don't get the agent stuff yet. I'm still trying to learn it. There's but I do know that there's a lot of issues in terms of the old guard, particularly like the software.coms of the world. And in the last decade, these winners are going to have to move over, right? There's a new winner, a group of winners coming up.
Absolutely. I mean, what we're seeing here or this is sort of who we think are going to take over the baton.
Right.
Because they're growing faster, because they've got cheaper and better products, because they're built on accelerated compute. And they're taking market share. We're already seeing signs of this. AWS, Azure, these hyperscalers, these cloud providers, they're not inked into the sovereign AI deals that we're hearing about. These are Oracle and CoreWeave for good purpose.
Right.
Shopify is taking on Amazon, growing orders 22% GMV versus low single digits for this company. So we're not saying that these companies are going to fall off a cliff.
Sure.
We're seeing a gentle erosion of market share, which we think profitability will soon follow.
So again, Shopify, Amazon, OpenAI, Google, Oracle, which has already made a huge move, ServiceNow, Zscaler, and CrowdStrike. I got a minute to go, and I had to ask you about this. I saw this on your list. I have subscribers in this, and it's up big. We're almost at a double top here. I think at least 3 short campaigns, right? That's what hit the stock a couple times. Looks like all that's over with. If you look at the numbers for AppLovin, this feels like this stock could double from here. I mean, it feels like too good to be true. What's the story?
So we think there are 2 important components to know about this company story. The first is that exponential growth is actually baked into the platform itself. And this is because AI is self-learning. So they're the number one in terms of their ad tech stack for mobile gaming. But because it's self-learning, reinforcement learning alone is propelling top-line growth for this company 20%. You then layer on direct model enhancements, expansion into new categories like e-commerce away from its traditional stomping ground in gaming, and you can quickly see we're talking about exponential growth. This is a company that's now growing at 77% year on year.
Wow.
And the other component is the operating leverage story, because AppLovin is automating the ad funnel from beginning to end. And this means that they don't need to grow their expenses as they scale.
Wow.
So this
Sounds
is
amazing.
A company that's now producing 4 million EBITDA per employee, and that is climbing.
Claire, I can't wait for you to come on again. 2 hits with you, and I'll have a degree in something. Thanks a lot. Appreciate it. Good stuff.